So this is the US oil analysis for Monday the 19th of February. Now, let's just have a look what happened with prices and where prices may actually go. So we saw prices come down towards this 58.28. We did find some major support here. Found some support in around the 58 level, 58.28. So this strong bullish buy side momentum coming into the market from this strong major level marked out here in red. And level previously identified as well, and it was a level from 2017. It's proven itself again here in 2018. We saw this bullish buy side momentum come up in towards this area that we do have the confluence of the 61.48 major level marked out in red, with the added confluence of the 200 period moving average, thus increasing likelihood of seeing sell side momentum come into the market. What we did see was the sell side momentum come into the market, take us below the 60.25 all the way down towards that $60 barrel mark, slightly below which we saw bullish buy side momentum come into the market for a break of the 200 period moving average all the way back up towards the 61.48. Had a brief consolidation, a retest of the 200 period moving average, from which we did see bullish buy side momentum come back into the market. So we've broke retest of the 200 period moving average, headed back up above the 61.48. Had a brief consolidation. At present, we are seeing that bullish buy side continuation. The bullish buy side continuation so should see us head towards the 62.54. We are about 14 cents or so away from it, so in around 62.54 we'll see whether we do see that sell side momentum possibly bring us back down towards that 61.48. If we do break from there, we'll see our price react around the 200 period moving average, a successful break from which we're looking for price head towards that 60.25 or that $60 barrel mark. A break from the $60 barrel mark I wouldn't think would be likely, as it would be in alignment with this swing low here, as well as the around $60 barrel mark may act as support. But if we do break below the $60 barrel mark, we're looking for price head towards 59.35, 59.31, which is a very minor level. But ultimately, we're looking for price head towards our $59 barrel mark or the 58.28. The more likely we are we're more likely to possibly see further upside continuation before a move down towards, say, $59 a barrel. If we do see a retracement, we wouldn't expect it to be very deep. So if we do break above 62.54, we are looking for price head towards our 63.05. In around 63.05, we have to be aware of the 400 period moving average, which may act as a dynamic level of resistance. And again, if we do break back below 62.54, all levels previously mentioned should possibly come into focus. We have to look at those providing potentially support. If we do break above 63.05, however, we look for price head towards our 63.76. And beyond 63.76, the levels that we are looking at to the upside are above 63.76, minor level in around 64.76, and the very next major levels that we are looking at are in around the 65.60 and the 66.71 here on the US oil. Now let's just have a look at the daily chart for a higher time frame analysis. So as we can see here on the hourlies, we do look poised for further upside continuation on the US oil. So let's just head over to the daily chart, because on the daily chart we're in a pretty strong trend, but we did see a counter move. So let's just have a quick look. Now on this daily chart, we can see here we're in a very strong trend to the upside. Prices were heading up in a very it was a pretty strong trend. A few retracements here and there, but nothing very deep. More recently, however, we came in towards the $66 barrel mark. Prices stalled, from which we did see quite a bit of sell side momentum in the market. Very large candles, and covering a pretty sizable distance of a very short period of time relative to the overall trends that we have seen in the market more recently. Most recent trends, the market has taken its time to cover distances, whereas this was a very sharp sell-off. But from there, we are seeing quite a bit of buy side momentum come back into the market here. We do appear to have found support. We've got this very large counter trend candle off support, and we do see further buy side momentum coming into the market. So with the strength of this retracement here, possibly we look poised for a V-shaped reversal, and in in that case, we'd expect price to head back towards our $66 a barrel mark. There aren't any indications at present that the trend is about to dissipate, and this move to the upside after this most recent sharp sell-off is in alignment with this higher time frame trend of being to the upside. So we've had a retracement, a deeper retracement, and we are seeing further upside continuation. And let's just see, I wouldn't think it would be a significant Fibonacci level. If I were to draw a Fibonacci here on the US oil, just bear with me a second here. I wouldn't think it would be an important Fibonacci level. It might be, let's just see. I'll have to go back on here and no, probably like 38.2 or something. Yes, 38.2. Yeah, somewhere in around the 38.2 Fibonacci's in around a 58.65, and we actually turn around at 58.28. But I don't use the 38.2 Fibonacci. I use a 50 and 61.8 on the rare occasions that I do factor in a Fibonacci. So we have come down, found support. So this move back upwards is in alignment with this higher time frame trend after this schism in the markets, this most recent sell-off. So we do have multiple time frame alignments, thus increasing likelihood of possibly seeing that further upside continuation here on the US oil. And with that said, I'm pretty much going to wrap up the US oil analysis. Thanks for watching.